Welcome to another video on manufacturing accounts. Manufacturing accounts, as the word implies, manufacturing, it means the production of goods and services. This is an account that is used to ascertain the cost of goods manufactured during the financial year. So manufacturing accounts is used to get the cost of goods that was manufactured by a company or an organization during a financial year. Manufacturing accounts can be subdivided in terms of inventories, that's stock. We have the raw material, we have the work in progress, and we have the finished goods. Raw material is the material that is being used to produce finished or semi-finished goods. While work in progress, it consists of partly finished or work not yet completed. And when it means partly finished, it can be that the raw material has been put into production process but has not been fully converted to finished goods. That is our work in progress. And we have finished goods, which is the end product of production. Also have the analysis of costs, which will throw more light on when we are solving a question on manufacturing accounts. So we have the prime cost. Now these prime costs are costs or expenses that are directly charged to a particular unit. Now these expenses are directly incurred in the production process of finished goods. We also have the factory overhead. Now these costs or expenses, they are not directly traced. They are being used in the production process, but they are not directly traced. They are indirect expenses or factory expenses. Non-manufacturing costs. These are expenses that are deducted from the revenue of the period in which they are incurred. Now these are like expenses that are deducted from the gross profit or from the income of the organization. So once this expenses is being deducted from the income or revenue in the profit and loss of the organization, that's when we have our net profit of the organization. That is the profit that the organization made at the end of a financial period. For better understanding of manufacturing accounts, we'll be solving a question on it. This is a full question on manufacturing trading profit and loss account. Let's kickstart our journey. So this is the heading of our manufacturing account solving. Now this is an account for DBV Limited. So now to start up, you're going to add your opening stock of raw material. Opening raw material of 42,000. Then you add your purchase of raw material is 740,000. So when you add up, you are going to have 782,000. Then add your carriage inward of raw material, which is 7,000. Then when you add it up, you're going to have 789,000. The next thing is to less your closing stock of raw material. So your closing stock of raw material is 48,000. So when you less it, once you less it, you're going to have 741,000. So when you less it, the result you have is your cost of goods consumed. So now this is the total amount of goods that was consumed in the production process. So the next thing to do is to add your direct labor cost, which is in our question. So when you check our question, then you get the direct labor cost. So our direct labor cost is 274,000. Then once you add it up, you're going to have a prime cost of our factory overhead. So our factory overhead is our factory general expenses. Those expenses in our question that has factory and indirect included in front of it. And when you get to additional information, they are apportioned 2:1, which whereby they apportion 2 out of 10 to factory and 1 out of 3 to office. Now the expenses that we have there is the rent, insurance, and lightning, which is electricity. The general expenses to be is 62,000. Then you add your lightning. So lightning that we have there is 2:1. So you add the 2 ratio, which is 3. Then you use the factory ratio, which is 2, divide it by the total ratio, then multiply it by the total amount for lightning. So when you multiply it by the total amount, which is 15,000, so our lightning is going to be 10,000. Then you go for the next factory heating. So factory heating that we have is 27,400. Then you go for the next factory overhead. We have our rent and rates. Then our rent and rent was part of our apportionment, which is the apportionment for factory, or divided by the total ratio times 24,000. So when you do it, you are going to have 16,000. Then the next apportionment is our insurance, which is under our insurance premium. So insurance premium here, you do the same thing that you did for rent and lightning by dividing the ratio of factory by the total multiplied by insurance, which is 56,000. So the result is going to be 56,000. So the next one is our depreciation for plants and machinery. So depreciation for plants and machinery is part of factory expenses because the machine in the factory is being used in producing the products. So the depreciation for plant and machinery was 10%. So the cost of the machine was 560,000. So when you take the 10% of 560,000, you're going to have 56,000 as your plant depreciation for plant and machinery. So we also have an indirect wage. Our indirect wages is 290,000. A total of 1,587,000. Opening work in progress, which is in our question. So our opening work in progress is 27,000. So when you add 27,000 to it, you're going to have 1,609,000. Then you less your closing work in progress. Then when you less your closing work in progress is 30,000. Then when you less 30,000, you're going to have 1,579,000. That is your cost of production. Once you have our cost of production, the next thing to look to solve for is gross profit. So now to get to gross profit is your sales minus your cost of goods sold. So now the sales that we have here is 2 million naira, while you less cost of goods sold. So now to get your cost of goods sold or cost of sales is the addition of your opening stock plus your cost of production, then less your closing stock. That's how you get your cost of goods sold. Stock of finished goods, which is opening finished goods. Opening finished goods was 77,800. Then you add cost of production. So our cost of production is 1,579,000. When you add it up, you are going to have 1,656,800. The result you have here, which is your 1,656,800, is your cost of goods available for sale. The next thing is to less our closing stock of what? Finished goods. Closing stock of finished goods is 80,000. Then once we less 80,000 from our cost of goods available for sale, we are going to have a result of cost of goods sold is 1,576,000, which is our cost of goods sold. So when you subtract it from your sales of 2 million naira, you are going to have a gross profit of 423,300. Next thing to do now is to less our expenses. Now to less our expenses, what we're going to do now is to list all the expenses. When we list our expenses, we're going to put the figure for our expenses. And the reason why we are listing our expenses is to not to make mistake while calculating it. You can write your expense and also write the figure. So there's in some cases there are additional information that you won't pay attention, you won't focus on, and it's going to cost you a lot whenever you miss those additional informations. So when you list those expenses out, that's when you begin to look at the figure in trial balance, then look at the additional information if they have any additional expenses on those particular expenses. So I have listed all my expenses. So since I have listed all my expenses for lightning is 5,000 naira after we have calculated our apportionment, which is apportionment for factory is 1, then divided by the total ratio, which is 2 plus 1, which is 3, then multiply it by the cost of the expenses, or by the cost of the expenses. So now after we have done that, our lightning was 5,000. Then our office salaries is what, 88,000. Sales commission was 83,000. Discounts allowed is 9,600. Insurance premium is 2,800 after allocation has been done. Our general office expenses was 26,800. Bank charges was 4,600. Carriage outward was 11,800. Then our rent and rates was 8,000 after apportionment has been done. After you have calculated your apportionment, you have a rent and rate of 8,000. So after rent and rate, there was a depreciation in our question. So there was a 10% depreciation on office equipment. Now they said properties. Now office equipment is also a property of the company. So once you take the depreciation of office equipment, which is for 40,000, which is to give you 4,000, which is 10% of 40,000, to give you 4,000. Then when you add up these expenses, you are going to have a total expenses of 243,600. So when you must subtract these expenses from gross profit, which is this, you are going to have a net profit of 179,600. So this is your net profit for the year. So which means that the company made a profit of a net profit of 179,600. It was the net profit that was made in 2015. We have come to the end of calculating manufacturing trading for profit and loss account. Please do well to subscribe, share, like, and comment. Thank you. See you in the next video.